Well, I'll get started. If anyone else joins as we go along, they can jump in. But I really want to thank everyone for joining us today. My name is Lauren Washington. I'm the co-founder and CEO of Fundr, and I'm really, really excited to welcome you to Fundr and Daba's first webinar, which is Investing in Africa as a Non-Local Investor. So when I was first introduced to the Daba team, I saw so much possibility in how we can come together and partner. In the years that I've been building Fundr, I really have seen a significant interest in investing in Africa. And I think that interest is only growing over the last couple years or so. So the team at Daba was really exciting for us to partner with because they're building a company that's creating pathways into deals in Africa that I personally have never seen before. This partnership really allows funders' audience to expand their portfolios beyond the US and into one of the most exciting investment opportunities of the moment. So whether this is your first investment or your 20th, I think the next hour is really going to provide an interesting look into the current investing climate in Africa and how to get started. So let's move on to the agenda for today. So on our agenda, we'll do some really quick introductions of who's going to be on stage here. We'll cover the current VC landscape and then do a fireside chat between myself and Boum, where we kind of dive a little bit deeper into what he's seeing, what to look for, and why now is a really great time to invest. And then we'll make sure that we cover how to get started on the Daba platform and then a Q&A at the end. So to get started, I'll pass it on to Boum. If you'd like to do first a disclaimer and then introductions.
Yes, definitely. So just, none of this is financial advice. All the information here is purely for informational purposes only. For a full list of our disclosures, please go to daba.finance/presentation-disclosures. And yeah, starting with the disclosures are very important as a regulated entity. But we'll move into introducing myself. Hello, everybody. Thank you for joining this webinar here. I'm super excited to talk about one of the asset classes that we support, which is venture capital in Africa. I am Boum. I'm one of the co-founders here at Daba and the CEO and acting CTO. My background, software engineering actually, but working at NASDAQ 5 years, building capital market solutions for institutional investors, investing into US, Europe, and a little bit of Africa. And then was one of the very early engineers at the NASDAQ private markets team, after which I went and did my MBA focused on finance at the University of Chicago Booth School of Business. And for the last 3 years, I've been building Daba with an amazing team with the singular mission to democratize investing in Africa across all the various asset classes that exist and the entire continent. So just a quick few milestones. So today we cover venture capital, private credit, sovereign debt, stocks, bonds, and ETFs across primarily the Francophone West African market. We are geography agnostic with respect to venture capital, both funds and individual deals when it comes to the venture capital asset class, but the rest of the asset classes primarily are focused on the Francophone West African market. Today, we have over 25,000 active investors on our platform. Last year, we transacted over $1 million. We're actually just coming out of beta. We have a wait list with inbound AUM of $10 million, investing across about 13 African countries. And through our key in-market partnerships, we actually have about $1 billion worth of top-tier African capital market opportunity. And we are a US registered investment advisor, as well as working with a bunch of broker-dealers, banks, and custodians across, and fund managers across the African market. So that's a brief overview of Daba, myself, and thank you again to the Fundr team for putting this together. Lauren has been amazing, and I'm looking forward to diving into this conversation.
Same here. And I introduced myself a little bit earlier, but again, Lauren Washington, I am a 5-time founder, and those experiences that I've had building all different types of companies have really led me specifically to Fundr, based on the issues and problems I had fundraising as a founder, but also on the other side of the table as an investor. So what Fundr does is we use data and process to help investors make better, more efficient decisions. And we do that across the board in every part of the process. So from your deal flow coming in, we help evaluate using profiles and AI-driven scoring. We also provide data rooms for that. We help with the close. We're tracking in terms of who's coming into that round. We create auto-populated term sheets. We help with the fund transfer. And then we also help find and syndicate investments through our partner Sidecar, as well as track these companies long-term with monthly portfolio tracking. And what we launched last year was our insights tool that lays on top of all of this. So you can get deeper insights into your pipeline, so you can choose the best companies, your portfolio, so you can understand changes that might affect your overall investment, and then all the way down to your exit. We have worked with a number of different investing groups. So we work with venture capital firms, corporate venture accelerators, family offices, angel groups, anyone who is investing in a number of companies and wants to track those companies long-term and put that data to use. We have really great partners, like I mentioned. We have Sidecar, who helps with our SPVs, as well as Plaid, Dwala, and Stripe that help with the fund transfers and keep those costs low. And then we've also been in a number of different media outlets, most recently in Fast Company, that came out about a week ago, where we're discussing AI in the startup investing space. So check that out. So now I will move on and pass it over to Boum, who will cover the current VC landscape in Africa.
All right, so we've put together a presentation here that is primarily just to kind of like share some data points and open up the conversation. There might be some experts in the room, and for the people that are just getting acquainted with respect to venture capital in Africa, I think one of the things that's important to notice is we're coming, a little bit out of a very important kind of like high cycle. We're coming off a sugar high, right? At peak back in 2022, venture capital in Africa attracted about $6 billion worth of kind of like tracked and known investments. Since 2022 and 2023, we did see a dip in those numbers, which is in line with kind of like how the venture investments retracted across multiple kind of like regions as well. But obviously, Africa being typically perceived as more risky or riskier, investors kind of like retracted harder when it comes to investing in Africa. We're now seeing a faster deal pace in 2024, again, as more risky assets are becoming more and more attractive, interest rates getting cut across many markets. So that's a little bit around kind of like the capital inflows. A lot of the investors into African deals have been international, and that is primarily because local markets aren't as developed. That's part of the reason why Daba exists, which is to enable both local investors to participate, but give easier inroads into these markets for international investors that might not have access to these opportunities, might not know about them, given the structures of their own investment environment. So a lot of the capital has been coming from North America. That has led to very interesting kind of like legal structures. So you will see that a lot of the venture deals will typically have a US parent company that fully owns in majority the African subsidiary or subsidiaries. That has primarily been to essentially comfort the US investors to invest in structures that they already are familiar with, both from a legal perspective, but also from a tax perspective. So that has now kind of like become a standard. So as a US investor, you will typically see, you will be investing in a US company, typically Delaware Incorporated, but that wholly owns the African subsidiary, whatever country that might be. So, that is something that a lot of you on this call are probably already familiar with. There have been some major success stories, and we're going to touch a little bit on that within the fintech space, which has been the dominant kind of like industry in terms of kind of like deal flow. About 23% of deal volume in 2023. One of the major acquisitions was that of Stripe, of Paystack for about 200 million. There are some flagship companies that also did list on the New York Stock Exchange, such as Jumia, and there have been some recent acquisitions as well, such as the one from InstaDeep. So today, fintech still kind of like dominates, but there are other asset class, or let's call it industries, that are essentially gathering more attention, specifically climate related investments. So like I mentioned earlier, the number of active investors in Africa fell in 2023, and that is primarily due to kind of like shifting macro environment. High interest rates across kind of like developed markets made it, specifically the US, made it more interesting, call it, for the risk reward to park assets in the US versus going to seek alpha in a riskier market, or markets that were perceived as being risky. Also, with a lot of the capital having gotten into African deals in 2021, 2022, some of these investments, where some investors kind of like decided to kind of like hold on a little bit to dry powder and see how these investments were performing. So yeah, that's a little bit of on the VC landscape there. You could see, the chart, the chart on the top right there is really just comparing kind of like Africa, to other regions in the world based on volume and kind of like value, and you can see kind of like how it dropped in 2023. Next slide. So, looking into 2024, so far in the first half, we've seen about $780 million dollars worth of capital raised by African startups, which is a steep decline compared to last year's first half. Obviously, with more capital, with more deals chasing lesser capital, there's been a downward suppression of valuations, which is, so this is a perfect time for, for investors that are really driven by, call it, fundamentals, and are interested in kind of like getting the right deal at the right price, right? So, this is definitely an investor's market. So you could call it a correction. Others just, others might just say it is kind of like the asset prices kind of like moving with current macroeconomic conditions. But the opportunity still remains very, very, very much present. A lot is to be done across multiple industries, and we're in a very, very nascent market. I think the environment of the market that you'd like to look at in terms of how Africa kind of like tracks would be Southeast Asia. And we are typically on the 3 to 5 year lag with respect to how Southeast Asia has evolved in terms of market size in the venture capital space. And again, like I mentioned, there are a lot of opportunities that are primarily driven by key kind of changes, socioeconomic changes, internet penetration, more computer savviness. There are specific opportunities around, in financial services. There's still a lot of people that are unbanked. Healthcare, a lot of people still do not have access to healthcare education. So any single industry that you look at, there are problems and challenges to go solve. There are a lot of exciting companies that are going to tackle these challenges. Next slide, please. 2 slides over. Cool. So yeah, so that's a little bit of the landscape. Happy to answer questions, to dive a little bit deep in whatever might interest the audience here today, we can transition into the fireside chat.
Yeah, thank you so much for that high level overview. And I think it makes sense to now dive deep. I feel like you're such a wealth of knowledge and information that it would be really great to understand like what is driving all of these macro trends that we're seeing, and particularly how does that apply to investors who are not local, which is what we're focusing on today. So just to get deep into your mindset, I'd love to understand what inspired the founding of Daba, what led you to create this platform.
Yes, so founding story for Daba during the pandemic, I was building my first company, which was essentially Airbnb for business travel. I was building as a solo founder while working at Nasdaq, scaling it successfully, had about 10 employees, was already making $1 million in revenue, and was getting ready to raise our first round of funding when the pandemic happened. And that kind of like brought the hospitality industry, turned it upside down. And I wanted to, at the time, I knew I was gonna kind of like exit the business, and I wanted to focus on something that I was truly passionate about. I knew it was going to be in Africa. I didn't know what. After some soul searching, essentially started doing a lot of entrepreneurial coaching and advisory for a lot of African entrepreneurs across multiple countries, primarily remote. And that led to this organization called Africa Startup Lab, which is now a nonprofit. And with my now co-founder at Daba, we built a cohort of mentors that in essence coached about 800 entrepreneurs across 15 African countries. And we're offering entrepreneurial kind of like advisory, mentorship through different accelerator programs on the continent. And the realization that we rapidly got to was that beyond building capacity for entrepreneurs, it was mainly about capital. That is the end game. So diving deeper into the capital problem, we realized that the markets were, number one, very inefficient, structurally broken because of the lack of access, lack of information, or the lack of tools. And that is really when we started digging deep into capital markets infrastructure. And today, the vision for Daba is truly to become more like a BlackRock or Vanguard for investing in Africa, whereby you come into our platform, into our ecosystem, and there is a product, an investment product for any type of investor. So that means that we have to go in there and aggregate all types of investment products and distribute them through a singular investment infrastructure, which is our platform. And venture capital was de facto the initial asset class that we started with, primarily because that is kind of like, where Africa Startup Lab had started supporting companies. And we felt that it was a relatively smaller asset class. I mean, we spoke earlier, at its peak, it's $6 billion invested annually. African capital markets is, about $2 trillion worth, right, across all the asset classes in terms of tracked asset classes. So, and it's estimated to be about 15 in terms of like what happens outside of the tracked market. So 6 billion compared to 2 trillion, very, very small. So it gave us that kind of like, insular asset class with very few players that would allow us to build the initial precepts or concepts of our platform. Also, in 2021, we were actually starting to build a platform. Venture capital was all the hype, all the rage. Everybody wanted to invest in a startup. Where these kind of like we're mentioning, the amount of capital going into African startups was rising at a pace like nobody had ever seen. So everybody and their mom essentially wanted to invest in Africa. So this retail platform was the perfect time to build that, because the only way to invest was if you had access to a syndicate, or if you were part of a venture capital fund. Both of those options were very pricey. Investing in a venture fund, you'd have to kind of like put in at least 100,000, sometimes more in terms to be an LP in the fund. Or these syndicate deals were going at $15,000-$20,000 a pop. So that's when we really started Daba as the easy, simple, and effective way for individual investors that wanted to tap into what seemed to be a very magical moment in 2021, 2022 to invest in these African companies that were seeing a lot of capital inflows from very experienced investors across the world, the US primarily, but also coming from capital from Europe.
Yeah, I think that's your vision is incredibly exciting. And I really resonate with a lot of the issues and the reasons why you started Daba, because I feel like it's similar to some of the things we see here in the US. There's a lack of or asymmetry of information there. It's really difficult to get small checks into deals. But I can imagine in a space where it's really still nascent, that challenge becomes much harder, right? So I think what you're building and the fact that you're growing alongside this expanding opportunity is super exciting. Another really great follow-on question here from the audience is, what is the meaning behind the name Daba? I don't know that answer either.
Yeah. So actually, DABA started as an acronym, which means democratizing access to business in Africa. But it has a lot of other meanings that just honestly make it for us the perfect name. So in Ivory Coast, Daba is a tool. It's like the intersection of an axe and a kind of like a hoe. I think that's how they call it. And essentially, it's kind of like this farming tool that a lot of kind of like farmers use to plow their land. So agriculture represents the primary source of sustenance for about a quarter of Cote d'Ivoire, but a larger part of Africa. So like the same way that Daba, the tool, is the tool for, kind of like food and prosperity and nourishing yourself, we position Daba as the tool for investing. So that's one of the other meanings of Daba, as well as it means to eat in a language called Nushi. It means now in Arabic, and it means to give, I think in Spanish. So yeah, a lot of beautiful meanings, but it started as an acronym.
I love that. That's so thoughtful, like across the board. And also when you're a global company, you have to think about the meaning in multiple languages in multiple places. So that's great.
Correct. I wanted to say something about kind of like, you mentioned this trend of the market actually building, which, we see, markets are very cyclical. But one of the fundamental things about the African market is it is truly untapped, right? Which means that beyond the cycles that it can go through, the fundamental opportunity is very much so underdeveloped. So, our premise is by building that infrastructure, we will open up the existing opportunity, right? So what already exists gets, it's now made accessible to a larger pool of people. And by so doing, it actually goes into the market creation or the market enhancement cycle, which is how capital markets kind of like work, right? You invest, you make money, you take your profits, and then you invest some more, and then you grow the market. So we hope, right, to have both a market access kind of like impact, but also market development over time, right? By just simply the network effect of how capital markets work. So, just on that analogy of kind of like, building alongside the market, I just wanted to kind of like share that.
Absolutely. I love that. And speaking of, I think we can dive deeper into like what some of those opportunities are that are growing this market so significantly. Judith, you kind of read our minds. That's our next question. What are some of the best opportunities that are happening right now? And then for some of the other questions, David, I see your question too. We'll definitely jump into that a little bit later as well. So Boum, do you want to talk a little bit about the unique opportunities that we're seeing right now in the continent?
Yeah, so honestly, fintech is all the rage, right? Just because kind of like financial services are at the heart of kind of like the economy. Whether you're offering a healthcare service, whether it is that you're offering education, whether it is that you're doing agriculture. I mean, you need to get paid and you need to pay people. So payments has always been kind of like that primary kind of like layer of where a lot of capital has gone into. One of the most valuable companies, some of the most valuable companies are payment companies in Africa. We were, there's and payment developed in a different way than it did in the developed world, whereby in the US they have a very established kind of like card network, right, with the Visas and the MasterCard. But in Africa, mobile money kind of like leapfrogged that entire infrastructure, and kind of like mobile money is the primary way to kind of like pay people because it didn't require you to have a bank account, and a lot of people are typically unbanked. So financial services, one of the largest kind of like areas for opportunity. Some other areas that see a lot of investment, healthcare, education, I mentioned it earlier, transportation and logistics, right? So then you go into the second stack, which is, okay, cool, once people get paid, right? Like, what are the goods and services that, kind of like need to be accessed, right? You need to move people and objects from one point to another to enable commerce. So transportation, logistics, long haul, short haul. We've seen a lot of kind of like great companies in that space. Commerce, right? People need access to goods and services, whether it is online commerce, whether it is kind of like more kind of like traditional brick and mortar or some form of tech-enabled commerce, right, with some form of financial service kind of like appended to it, right? You'd see some companies that are kind of like doing that. Hey, you start with a traditional industry, call it, maybe commerce, or call it healthcare, and then you add on some form of financial service, kind of like bringing back that point that financial services are really key to the markets. Healthcare, still have a lot of people that do not have access to care, or for the people that do have access to care, the process is completely broken. So there are a lot of there's a lot of capital going into that. Very exciting companies in the kind of like drug distribution kind of like space. And then I mentioned education. So where every industry has kind of like its champions, but obviously when you go and invest, taking an industry approach is just one step, but you really have to kind of like look at what is the niche, what is the vertical, right? How does that evolve? And an important thing is beyond the industry, the niche, the vertical, look at kind of like how what's the scalability of the idea? Because given back to the concept of the maturity of the markets, as with respect to a specific country and its commercial viability to give you venture returns, you have to kind of like look at opportunities that can scale across multiple countries and potentially could be exported beyond Africa. So those are the businesses that see the most success. So beyond just industry, but also in the nature of the business. Is it scalable, and can it be exported, across other countries, but also beyond Africa?
Yeah, that's a really interesting point, because one of my follow-up questions was going to be, are you seeing a certain country that is really strong in a specific industry? But what you're saying is it has to be looking at all of these countries and globally in terms of what is being built there. So it's not necessarily like, a certain country is really big in healthcare, for example. It truly is sort of this macro economy that you have to be aware of when you're choosing investments within Africa. Is that right?
Absolutely, you do need. So again, so when you think about investing in Africa, you have these kind of like markets that have seen the majority of the capital go in, primarily because of the kind of like the size of the markets. We have Nigeria, large market opportunity, right? So a lot of capital went in there, right? You have South Africa, Kenya. So the key markets: Nigeria, Kenya, South Africa, and there's one other big market I'm forgetting, Egypt, right? So those are some of the main capital destinations. But when beyond the main capital destinations, you have to think about healthcare in Nigeria is different from, call it, maybe healthcare in Morocco, right? So you can't really do copy paste, right? You need to think about what are the key dynamics the key market forces essentially in this specific industry, in this country, in this niche. Do we have headwinds, tailwinds, right? Is this model, replicable, right? So it's not just industries, it's not just countries, but it's truly market dynamics, and which is why for a non-local investor, because tying this back, you typically, want to go into a deal with a local investor, right? One that truly understands the on the ground market dynamics, that can truly kind of give you the nuances, right, of the business model and the industry, so that you could build confidence in your investment case. But yeah, it's really every single deal is unique because every single market is unique, and the dynamics that govern a specific country and industry vary country by country.
Absolutely. And let's dive deeper into that, because you mentioned one of the things that is really important is finding a partner or someone who understands those market differences. So let's talk a little bit about some more about the key risks and challenges. And David, you had a specific question around how a foreign investor can manage currency risk. So let's talk a little bit about some of the overall risks, and if you can speak to that as well, that would be great. I know we have a slide here for this as well.
Yeah. So currency risk it's a very important one, especially if you're coming as a non-local investor. Okay, so I really want to approach this from a great angle. So when we started Daba, right, we were looking at what are the challenges that we can take on that are within the realm of control for us to build an effective platform. And we understood that currency risk was a very important risk that is hard to mitigate. And today there aren't a lot of solutions that are out there to kind of like deal with currency risk. A lot of the investors, right, that kind of like all that capital that went into Africa, had to take on the currency risk. So what we did at Daba, especially for non-venture opportunities, is we went into the first market that we built investment infrastructure for other asset classes, is the Francophone West African market, which essentially uses the franc CFA, the franc CFA. So there are quite a few number of currencies across Africa. Each have kind of like different dynamics with respect to the dollar or other larger currencies, euro, yen, and rupee, and all of that. So when you're looking at a specific company, try to understand in which currency they're getting their revenues, and then you can extrapolate kind of like what the discount could be, over a certain time period based on kind of like how you are thinking about the relationship of your, specific currency with respect to that, main currency in which they get paid. So we started with the Francophone West African market because it is the franc CFA. That currency has an exact peg to the euro, hence any investment that you make in that market is essentially as if you are investing in the euro. And what that means is that as a US investor, you're only taking euro risk. You're not truly taking kind of like CFA risk, because the CFA has a fixed rate with respect to the euro, always, right? So that allowed us to essentially abstract currency risk in this kind of like first iteration of kind of like stocks, bonds, ETFs, and kind of like savings products that we're building within our infrastructure, but not for venture. Right. For venture, you are fully invested in this company. If the company is earning revenues in Naira, Ghanaian cedi, then yes, you're going to take that hit. And that's essentially what happened for a lot of the companies in last year, and going into this year with a lot of those currencies being a lot of downward pressure. I mean, last year, I think the Ghanaian cedi was one of the worst performing currencies. So you have to think about those kind of like that, the relationship of the currency in which the company is earning their revenue with respect to the currency you're investing in. Also, I think one other way, I mean, like, there are some products that are coming to market, which allow you to kind of like have like forward contracts and some form of kind of like coverage on like some of those currency pairs, but none of them really last long enough, right, for the duration of venture investment. So it's really hard to kind of like match the duration of some form of hedge with the duration of a venture investment. And then the last piece on currency is, I would say, try to really understand how the company itself thinks about revenue with respect to with respect to the currency that they're earning in, or do they have some form of a hedging mechanism for them to essentially book wins in a much more stable currency, such as the dollar and whatnot. But what I would say is, again, this is all cyclical. We're now seeing kind of like a softening of the dollar with what's happening. So, a lot of African currencies have actually gained kind of like market share with respect to their relationship to the dollar. So it's a good. We're now at kind of like the top of the cycle in terms of kind of like the market conditions being really favorable for investing in Africa. Now, again, as a venture investor, if you're going early in these deals, you you have to truly understand, how long am I staying in? What's my true exposure? Is there any form of mitigation happening with respect to to where the company is over the lifespan of my investment? Does it even really matter? Because this company that I truly believe in will essentially figure out a way to start earning in a much more stable currency, or will get sophisticated to do some financial engineering around cash positions. So, you have to match the risk with the horizon over which you're investing, and kind of like see what is being done by the company and what the market environment kind of like has, and make a decision based on that. Other than that, there are several other types of risks, the same risks that apply in the US or other markets, just localized or tropicalized to the African context. And those risks will typically be also industry specific. There might be some regulatory risk. There might be some market liquidity risk, right? So the secondary market, for example, in the in Africa isn't as developed as the secondary market in the US, right? Like, for example, I mean, this might not be the right example, but like a company like OpenAI, right? Private company, right? Strong secondary activity happening on their shares. It is a very valuable company. It's a very high company, but let's say you took the equivalent of a very valuable company, in Africa. There is no guarantee, just because of the structure of the market, that you will find a bustling secondary market for those shares. So, again, that is a shifting market dynamic because it's based on cycles, right? So you would see a lot of secondary activity back in 2021, 2022, when a lot of the previous investors that had gone in 2015, 2016, 2017, where, were looking to kind of like start realizing some gains. You had a fresh new wave of investors coming in. So you would see a lot of that secondary market activity happening. But then, like, when you are in a cycle where there's a lot of dry, capital that is not getting invested, then the secondary market is pretty much stale. Those types of cycles can happen in the US as well, but essentially it's essentially the same types of risk. Information asymmetry, it's much harder to get access to information in Africa, primarily because of the way we keep records, a system of records. True competition in a lot of industries in Africa is pen and paper, right? So in such an environment, it's it's still very hard to get access to information. So so those are some of the risks, but there are several others.
Yeah, and I think Rian has a really good question here that connects this conversation we're having about currency risk with what we talked a little bit earlier about like expansion of these startups. So he has have the companies that have done really well expanded more in the country of origin, cross border within the continent, or internationally. And how has the trajectory of post funding? What has the trajectory of post funding been for those companies? So are they getting investment internally or internationally?
Yeah, so the market rewards the winners. So in any market, the winners are the ones that are rewarded. So if a company's fundamentals are good, they're hitting their metrics, they're bringing in revenue, they're on a track to increase significantly market share or their top line and their bottom line, they get investments. What we've seen is companies that have been capable of expanding across markets rapidly have definitely been able to garner more investment. And if you're capable to export beyond Africa, so what we've seen is a lot of successful companies have started like selling into the Middle East, because the Middle East, represents like similar market dynamics in terms of the nascency of the market and the services. So, like if you are an African company, you started in Africa, but you're selling your solution to a market in the Middle East, it automatically makes you more attractive because it's a large market, a lot of capital, and especially there's also a lot of investors in that market that are looking to invest in companies. So yeah, so companies that have been able to scale across market, especially and export their solutions beyond Africa, have seen quite a bit of capital inflows into their businesses.
That's great. And so we talked a little bit about risks, and there are very real risks here. I think that's true across the board if you're doing early stage investing, but I think there's also a lot of myths that come out of investing in Africa. Can we touch on a few of those that you think are running around that are actually not true that you want to dispel here?
Myths. I mean, you have them on screen. So I think like the most important one is kind of like this kind of like myth of like you're investing for impact and not kind of like actually investing to make money. Um, there is a lot of money to be made in Africa, and before starting to actually build this platform, I wasn't a capital market investor in Africa. Had kind of like or involved with different businesses, but wasn't like investing in capital markets, right? Stocks, bonds, venture, all of that. But since I started building the platform and actually being my first customer, I've truly seen that all the noise is truly about investors that are people that are looking at maybe just the headlines and not digging deeper, right? So there is money to be made. You need to have access to the right information, the right tools, and the right people in terms of kind of like partnering on the continent. But there are returns to be made. So that's the first thing. More than the investment risk, like Africa is seen as very, very risky, just like any market. I mean, people that invested with FTX, right? It's quote unquote U.S. company, but was domiciled I don't know in which island, and was getting capital from the largest investors. Turned out to be a massive scam. So these types of risks exist across all markets, not just so and like the picture that people paint of Africa being beyond risky is not just true, right? You have the same types of risk, and by and large, you have great actors, and just like in any market, you can have bad actors, right? And unfortunately, the negative narrative has been exacerbated when it comes to Africa. The infrastructure, yes, infrastructure and different types of infrastructure is not at its best, but it's definitely evolving rapidly and enabling a lot of opportunity. And the market is truly large, right? People typically tell you like Africa is a small market. One other thing is like typically people will refer to Africa as one market. Africa is 54 countries, right? 55 depending on who you ask. And essentially the each of those markets have have different dynamics. So it is not one market, different markets that have different dynamics, but whether depending on which country, or in aggregate, those are relatively large markets, and it is a growing market in a lot of ways because of the demand, the population increasing rapidly and being the youngest on earth. So yeah, so those are some of the myths and that I can discuss, and there are a few more here on screen.
Yeah, I think that's really great to break these down and truly understand what's real and what's not, because we don't always get the full story, I think, here in the States. So of everything that we've discussed, I know we've talked about really exciting opportunities, some risks. What's the thing that excites you the most right now about the startup scene? I know we have a couple slides on this.
Well, just kind of like I think this cycle for me is a very interesting one to watch. I think all the conditions are coming in place to really see that the same type of like rise and even more than as the one we saw a few years back. So that's just in terms of kind of in the short term, it is exciting to see kind of like the tables turn, and the market is kind of like seeing the resilient companies, the one that had businesses that merited to get access to capital, and it's kind of like flushed out some of the bad actors, some of the inefficient actors, and things like that. So I think that just from a pure economic standpoint, a macroeconomic standpoint, is exciting. Beyond that, I think the true realization of the market opportunity is quite exciting. We've seen kind of like high profile investors more and more allocate capital into African opportunities. So that's great, and we're seeing maturation of the African capital markets, allowing for kind of like local companies, these startups that are getting capital to then graduate to exchanges or to more liquid kind of like markets, hence provide liquidity and exits to previous investors. We've seen a lot of high profile startup exits, right? And here are a few on screen right now. The large one was the InstaDeep kind of like the InstaDeep kind of like acquisition that happened last year, about $550 million in cash and stock. But there are a few more across Africa that truly show that there are returns to be made, and for the right businesses, the end of the journey can be a very successful and lucrative financial outcome.
Absolutely. And that statistic where you said by 2050, 1 in 4 people will be African is truly mind blowing. And so this is the time to get into that. That's happening in our lifetime. So this is the time to get into the space. And I feel like Daba is the right tool to do that. So let's chat and switch gears a little bit to talk about how Daba helps facilitate investments for anyone who's interested in that. And then we'll make sure we leave about 5 minutes at the end for any additional questions. All the questions that have been coming in have been great. Want to make sure that you all have time to ask anything else after this.
Yeah. So in short, Daba is kind of like your investment management tool for African opportunities. Venture capital has been kind of like our founding asset class, but today we cover stocks, bonds, ETF, savings products as well, right? And the way that Daba operates is just like your traditional investment app here in the US. Kind of like Robinhood or TD Ameritrade. You open an account, you complete your KYC, right? Once your identity is verified, you can fund your account and start investing. And the beauty of Daba is the minimums are relatively lower than any other option you might have to invest in the equivalent opportunity. For example, for venture capital, most deals you can kind of get into like the $500,000 mark, sometimes lower if the opportunity allows. We've had some opportunities where we've allowed us as low as $150 for some startup for a specific venture deal that really wanted its kind of like customers to be able to get in. So, you know, like the access and affordability of the deals is one of the important things, and just the sheer diversity, right? You can truly build a fully diversified African investment portfolio. And by nature of the fact that we're an aggregator and, you know, kind of like this investment management tool for Africa-focused investors, you know, we have access to top tier opportunities across each of these asset classes with a lot of strong partnerships, whether it is in the venture capital community, with fund managers, and, you know, like we're, you know, I think there are a couple opportunities that will talk about here, maybe in a minute, and also across other asset classes. So that's how you leverage Daba. You know, so we provide the access. We also provide information and insights. We have a lot of data and, you know, kind of like blog posts and articles. We have an excellent intelligence team that provides a lot of insight on the market, and yeah, very simple tool. So you can sign up, complete your identity and your identity verification, and start exploring the opportunities. I'm also going to just kind of like paste the link in the chat right now if you cannot scan this code, and yeah. So that is how you get started with Daba. Maybe just touching really quickly on some of the venture fund opportunities. So when we started with Daba, you know, we were focused on kind of like, we started with venture deals, individual deals. So we did that, and then we realized that, you know, investors wanted, you know, most investors wanted a managed approach to their venture investment. So rather than doing the individual stock picking or company picking, they wanted a professional fund manager to kind of like pick those companies and be invested in those funds. The problem is most of these funds have super high minimums, 100,000, 250,000 for the high profile ones. So, you know, by having proven the use case of individual venture investment, having had some successful investments, you know, we went to these venture funds and we said, you know, the work you're doing is truly impactful. There's a lot of capital sitting on the sideline from retail individual investors that might not meet the thresholds that you're setting today for your funds, which is primarily geared mainly for institutional professional investors, but, you know, that would love to participate. So we have a strong kind of like quote unquote wait list of venture funds that are waiting to get listed, but we have 2 top tier ones already on the platform. So, you know, one that is a second or third fund have already reached close, have had successful, both of them actually have had successful companies in their previous funds. They have great track record, and are, you know, the first fund opportunity one that we can't name here simply because you know, we don't want to do general solicitation. You can go and look them up on the platform. But the first one, you know, they invested in some of the unicorns. The second one as well, and the first one is focused on pre-seed, seed. The second fund is seed Series A. So yeah, go check them out. 2 top tier funds when it comes to the specific sectors and stages that they invest in, that have accepted to open up allocation for retail investors on Daba, and we are truly the only retail investment platform that is given access to these top tier venture funds in Africa, and we're looking to add a few more over the coming months as well.
That's incredible. Thank you so much for all this information. I know I learned a lot. I hope this was useful to everybody else on the call. We have a few minutes left. I'm happy to stay a little bit later as well if anyone has questions, but I'll open the floor to anybody here now who has questions for Boum. Did we cover everything?
Hopefully that means we were thorough.
I think so. All right, well, I'll leave this with our information on the end. So hopefully you've seen Boum's link here, which is just go to daba.finance/app to sign up for any of these opportunities. You can also reach out to me directly. I'm leaving my email address here if you have any questions on Fundr. But thank you so much for joining. We really appreciate you being a part of this. We'd love to keep the dialogue going. So if you have any questions afterwards or you'd like to find out how to get involved, please use these ways to get in touch with our teams. Anything else, Boum,
Thank you
before we...
all. Yeah, I was just gonna say, thank you all for attending. Thank you, Lauren, for your partnership, and thank you to the members of my team, Zolani, Mike, that were instrumental in putting all of this together.
Amazing. Thanks so much, everyone. Have a good one.
Thank you. Bye-bye, everybody.